Statement of profit or loss along with statement of financial position help users to understand the financial health of the business. It is also show the trading result or profitability of a business, and the purpose of the statement of profit or loss is to show either the gross profit or gross loss and the net profit or the net loss. This statement also focus on the business revenues and expenses during a particular period. Other than that, it also covered the information on cost of goods sold, gross profit, expenses, and net profit. So what is income or revenue? Income represents the gross increase in owner's equity resulting from business activities. It can be divided into revenue and other income. So what are the examples of revenue? Revenue derived from the sale of goods, whereas other income derived from commission received, interest received, dividend received, and rent received. So we can classify as commission received, interest received, rent received as other income. Okay, now let us look at the meaning and example of expenses. Expenses means cost of asset consumed or services used in the process of earning income. So business must incur expense items which are necessary for the continuing operation of the business, but for which no long-term benefit will be obtained. Example of expenses include purchase of goods, salary expenses, and then interest expenses, insurance expenses, discount allowed, and rent expenses, and they are and other type of expenses. Okay, these are the example of the statement of profit or loss. It always have the company name on the top of the statement, followed with the title and the date, and then you can see these are the element. This is that is inside the statement of profit or loss. We consist of sales revenue, cost of goods sold, gross profit, operating expenses, and then we have the net profit. Now we look at the relationship of profit to the accounting equation. So what is profit? Profit is the difference between income and expenses. Income is also known as revenue. So from the equation, if revenue higher than expenses, the business will gain a profit. Whereas if the revenue less than the expenses, therefore the business will suffer a loss. Since profit belongs to the owner, it should be added to the capital of the business. Therefore, the basic accounting equation, that is asset equal to liability plus asset equal to capital plus liability, can be further expanded taking into consideration of the profits element, which is expenses and revenue. Therefore, the expanded accounting equation will be as follow: asset plus expenses equal to equity plus revenue plus liabilities. Now, let's see the equation. The basic accounting equation consists of three elements. Asset equal to owner equity plus liability. So, in order to calculate the owner equity, you can use this formula. Owner equity equal to capital minus drawing plus net profit or minus net loss. And for the net profit, it can be calculated by using this equation. Net profit equal to revenue minus expenses. So if you replace these equations into the basic accounting equation, the equation would now become asset plus expenses equal to owner equity plus revenue plus liability. There are 5 elements in expanded equation as compared to the three elements in basic accounting equation. Okay, now let us look at the effects of the transaction on the expanded accounting equation. Okay, we have the transaction from example 2.7, 6 January, paid rent 200 by cash. So the effects are increase in expense, rent, and decrease in asset cash. And for the 7 January, receive dividend by check 250. The effects are asset bank increase 250 and revenue in term of dividend received also increase 250. On 8 January, paid telephone bill by cash 100 ringgit. The effects are expense increase, telephone bill increase 100 ringgit, and asset cash decrease 100 ringgit. 9 January, receive commission by cash 400 ringgit. The effects are the revenue, which is the commission received, increase, and asset, which is cash, also increase. So that's all.